So let me summarize this. You have a deal, you want some money raised from somebody. You can first look at the money you have. How much money do you have? How much credit? Do you have credit card? Do you have credit lines? Have you built enough credit? I mean, building credit is a lifetime mission. I'm constantly building credit, checking my credit. I go on, Credit Karma. Doesn't cost me anything. I just check constantly. So building credit has been my mission since I was in my late teens. I figured out the credit system, and I realized this country works on credit, and the more credit I have, the more deals I can make. And credit is a sword with two blades. You either attack and do well, or you get attacked and file bankruptcy. And look, guys, you can file bankruptcy and recover. It's not the end of the world. As a matter of fact, you file bankruptcy, Capital One, a credit card will give you a credit card for a couple thousand to help you start rebuilding, and then you can start rebuilding. Filing bankruptcy is a financial structure that people use, but it's not good. It will ruin you. The mistakes you will make in your 20s, it will take you 10 years to recover. You don't want these mistakes. So you build credit carefully. That's number one. Number two, you start looking for lenders like banks, hard money lenders, etc., because it's better than having partners. Number three, you can look for partners. Now, if you look for a partner who's going to make decisions with you on the deal itself, what you're going to do in terms of what's inside, the colors, so they have decision-making capability, the SEC is fine, they're not going to tell you anything. So if somebody, a family member or anybody, is going to loan you and they're going to record a lien against the property, they're going to give you a loan and you're going to pay them interest again on that money, that's also okay with the SEC. But if somebody's going to give you money with the expectation of you making decisions on something fully, and then you're going to pay them a return based solely on your decision, that's a security. A security is when you're going to get a group of people to give you the money to do a project, and you're going to pay them back that money plus a return, and you're the sole decision maker, you and your partner, whatever. That's a security. The SEC says now you're raising money, you're in the realm of the Securities and Exchange Commission. We need to know who you are. We need you to file with us federally and in every state where you're going to raise money from different people. So we know that you are Maya, and that you are filed in California, and you're going to raise money in California for these projects that you're doing. Now we're cool with you. You're protected under the law of the exemption rules of Regulation 506D, 506, 505, 504. They have so many exemptions for different businesses and all this. The best are Reg D 506C and Reg D 506B, and I can give you a million reasons why we set up these. It is better than me having a bank. I had applied for a bank license in 2013, suspended that and canceled it because I realized it's better what I already have. The only thing maybe better than that is to own your own insurance company, but that comes with a huge set of regulations and software and stuff. You don't want to go there. That's like when you reach very high net worth. Okay, so to summarize this, if somebody's going to loan you or partner with you, SEC doesn't care. But if somebody's going to give you the money and you're going to make the decisions, and it's kind of 2-3 people, you're a security, which is the best way to be set up, if you ask me, because you're making the decision. You tell them exactly how you're going to do it. You formalize the process, and there is no confusion. Because where does the confusion come from? You're doing something. Somebody tells you, I like what you're doing. Can I partner with you? And you don't have a structure. So what do you tell them? Okay, I'll pay you 6%. No, that's not enough. Okay, you need to put the money with me. I'll give you 7 if you leave the money with me 2 years. No, I want to leave it only 1 year. Now it's all conversations going nowhere, and you cannot do the deal. You don't know what to offer. But when you have a private placement memorandum and there is a structure, and you're telling the people, I'm filed with the SEC, if you want to join me, this is what I do, I'd love for you to come in, and this is what is filed with the SEC, this is how we're going to pay you semi-annually, quarterly, we're going to give you this from the upside or this steady return, etc. You now are in the real highest level of real estate transacting. And believe you me, you haven't grown up until you become a real estate fund manager. Syndication is one asset, is one deal when you set up this for one deal. Well, that's not as safe as you set up a fund where you raise money and you can do several deals because their money is cross-collateralized against all this. setting up a fund, a debt fund, like we do with cracking the code. Anybody interested and is serious about this, reach to our office. I'll give it to you turnkey at $25,000, less than what attorneys charge. I charge $30,000, and I tell you, I don't do training, I don't do anything. You tell me what you want, I'll do the paperwork for the SEC. We do it all for you with our in-house attorneys and everybody working with us, turnkey with a training on how to raise money so you can really go to the big time.